What if I told you that millions of people around the world are following rumors about currency revaluations without ever understanding how global monetary systems actually work, and that right now you're about to learn the truth behind what really happens when a nation begins adjusting its economic policies, its exchange rate strategy, and its long-term financial reforms? So before we dive deep into this eye-opening journey, make sure you hit the like button, subscribe, and stay with me till the end, because what you're about to hear will completely change the way you look at international finance and the buzz surrounding countries like Iraq. So let's begin by pulling back the curtain on how a currency's value is determined and why the process is far more complex than the public ever realizes, because while social media channels, forums, and influencers often talk about secret rate changes, hidden documents, or sudden financial resets, the reality is that currencies move according to measurable fundamentals: economic growth, political stability, inflation control, foreign reserves, monetary tools, and international trust. And each of these components plays a much bigger role than any rumor ever could, especially in a nation rebuilding its economic structure like Iraq, which has spent years trying to stabilize institutions, modernize banking operations, and implement reforms through transparent cooperation with global partners. The IMF, for example, does not receive secret RV rates, nor does it approve sudden overnight changes, but instead works with countries through formal consultations, policy assessments, financial monitoring, and well-documented frameworks that guide sustainable long-term development. So when people hear words like monetary reform or exchange rate adjustment, they often imagine dramatic overnight transformations, but in truth these are slow, methodical, data-driven processes that can take many years to finalize, involving teams of economists, auditors, and policy specialists who analyze every consequence of even the smallest rate modification. It's also important to understand that a country cannot simply declare its currency more valuable, because a currency's strength isn't based on hope or intention. It's based on real economic output and the world's willingness to trade in it. And this is where Iraq's journey becomes interesting, because its monetary reforms are real, but they're rooted in improving the banking sector, reducing corruption, digitizing payments, attracting global investment, and aligning with international standards rather than chasing unrealistic overnight revaluations. The reason so many people get drawn into these rumors is because the idea of a dramatic economic turnaround is exciting and emotionally powerful. But the truth is that sustainable economic growth is built on foundations like diversified industries, stable institutions, and sound fiscal policies, which is exactly what Iraq is working on through its government plans, CBI modernization efforts, integration with international systems, and adoption of global compliance procedures. When people hear news about Iraq meeting with the IMF, discussing reforms, or updating economic frameworks, they often misunderstand these steps as signs of an imminent surprise, but really they represent ongoing, incremental progress. Important, yes, but never sudden or hidden. And understanding this distinction is crucial for anyone looking to build real financial literacy. Now that you understand the foundation behind how currencies are valued, let's take the next step and explore how global financial institutions like the IMF actually participate in a country's monetary evolution. Because this is where most of the confusion online really begins, with influencers often claiming that the IMF approves or announces a new exchange rate, when the truth is that the IMF does not set national exchange rates at all. Instead, it monitors economic conditions, provides technical advice, and ensures that any major changes made by a country are consistent with global financial stability. And to understand why this matters, imagine a country suddenly doubling or tripling its currency value overnight. This would create massive market distortions, disrupt trade contracts, destabilize domestic industries, and produce immediate inflation or deflation pressures, which could harm millions of citizens. So the IMF's role is not to approve sudden jumps, but to ensure countries adopt responsible, gradual, and transparent reforms. This is exactly why Iraq has been focusing on modernizing its financial sector, because international confidence increases when a country demonstrates predictable regulation, digitized systems, anti-corruption measures, effective budgeting, and strong governance, all of which Iraq continues to work toward. When analysts mention Iraq's monetary reform roadmap, they're referring to documented strategies like improving banking, supervision, expanding international settlement tools, attracting foreign capital, and building a more stable financial environment. Yet, many people mistakenly interpret these steps as signals of a dramatic revaluation instead of understanding them as requirements for long-term economic health. The real transformation happening in Iraq is centered around institutional development, not secret rate changes, and this is where investors and observers should focus their attention, because building a stable financial ecosystem takes years of coordinated work between government ministries, central banks, and international partners. In fact, economic history shows that successful currency adjustments only occur when a country's inflation is controlled, public institutions are strengthened, and fiscal discipline is maintained, all of which Iraq is gradually improving through national projects, improved revenue management, and the expansion of non-oil sectors. So instead of waiting for a sudden miracle, it's far more valuable for people to understand how these reforms create opportunities for future market stability and investment growth. Misconceptions arise when the public misinterprets technical discussions between Iraq and global institutions as indications of a massive upcoming event, but the reality is that financial transparency requires nations to regularly update partners like the IMF on economic conditions, reform progress, and market projections. That's standard procedure, not evidence of a dramatic shock. Learning how to interpret these economic signals correctly is one of the most powerful tools any viewer can gain. Because once you understand the real process, you can separate fact from fiction, substance from speculation, and genuine progress from exaggerated claims. And that's exactly why this video aims to help you build knowledge that lasts, instead of chasing rumors that fade. As we reach the final part of this deep educational journey, let's connect everything together so you walk away not just informed but empowered to understand global financial news with clarity, confidence, and real knowledge. Because the biggest challenge audiences face today isn't a lack of information, but a flood of misleading interpretations that distort reality. So, when you hear headlines about a country approaching monetary reform, submitting reports, adjusting financial laws, or working with global institutions, understand that these are meaningful developments, but not indicators of sudden wealth events, and recognizing that difference helps you think like an economist rather than an online rumor follower. Iraq's path forward will continue to depend on its ability to maintain stability, diversify its economy, strengthen governance, and integrate with international systems. And these are genuine achievements worth understanding because they create long-term opportunities for the nation's population and for international partnerships. Financial education matters because it protects people from unrealistic expectations and helps them make better decisions. And that's exactly why this script focuses on delivering factual, research-based insights rather than fantasies. When you analyze a country's economic future, focus on what truly influences its currency. Investment inflows, inflation levels, banking transparency, trade relationships, technological modernization, and geopolitical stability, all of which Iraq is actively working on in different ways. The reason global analysts pay attention to Iraq is not because of rumors, but because of real, documented progress in digitizing its banking system, attracting foreign participation, and improving compliance with international standards, steps that can gradually build a stronger economic environment. Instead of guessing when a currency might shift, a more valuable approach is understanding why a nation would adjust its exchange rate in the first place, because such decisions are based on economic competitiveness, price stability, and international trade, not random predictions. The more educated you become about these systems, the less likely you are to be misled by dramatic statements, and the more capable you become of evaluating real reforms objectively. So, as we conclude this knowledge-rich narrative, let me leave you with one final message. Always seek information rooted in real economic principles, verified data, and transparent processes, because true financial empowerment comes from understanding how the world works, not from hoping that rumors turn into reality. And if you want more educational videos like this, breaking down complex financial topics, analyzing global markets, and helping you understand real monetary processes, then make sure you like this video, subscribe to the channel, turn on all notifications, and share your thoughts in the comments below so we can continue building a smarter, stronger, and more informed global community together.